Good morning. It's Tuesday, January 30th, and happy day after SMCI earnings day. We're going to go over SMCI. We're going to go over Google. We're going to go over Microsoft. We're going to go over AMD. There is a ton of earnings, including today. SOFI yesterday, obviously they beat, they jumped. SMCI announced, and then they shot up afterwards. Cleveland Cliffs are reported yesterday. We have had UPS this morning, JetBlue, Pfizer, ton of earnings, but we'll go over everything that you need to know. In the stock market today, kind of the core portfolio, we've got a big week. It is all about the Super Bowl week. And if you didn't see my post on X, the new Madden 25 cover is out. Go and check it out. Maybe I'll include it in the newsletter. Qs. I said yesterday, this is a chart that I posted with a no potential button hook, but still has confirmation above the 9-day EMA. People are asking me, should we get out? Well, let's look at some things. The MACD is potentially crossing down. The RSI is oversold. It's even more oversold at 71. Yesterday it was at 66. So we got to take a look at it. But one of the first things I want to look at is David asked me yesterday on the newsletter, what does the scan indicate? That scans list that I do. So for anybody that doesn't join me live on YouTube, let me just go over what scans are. So at the beginning, if you join me live on YouTube every morning, I simply start out the live portion with just going through scans. And what I do is I go into TRENDSPIDER and I pull up my 4-hour algorithm and I scan. I scan a bunch of stuff. I scan all the lists that I provide you, the core portfolio, the levered ETFs, the spider sectors, the Dow, the NASDAQ, and the S&P. All of those lists I scan. And I say, it basically says, okay, what has an entry in the 4-hour algorithm? So for those of I started doing that because many people weren't subscribed to TRENDSPIDER. TRENDSPIDER is an expensive tool. So if you're just beginning your trading career, or if you're just getting into stocks and you don't want to spend $700 to $1,000 on TRENDSPIDER, then it's a way for you to implement my 4-hour algorithm into your system by finding those that have entries. I don't do exits. I just do entries. Finding exits is your own responsibility. But I do these scans every morning live on YouTube to begin the podcast. And so when you see scans, and you we'll go back to the newsletter. Again, these newsletters are all free. And so the scans are 100% free. And you'll see them at the bottom of the newsletter. And it comes in every day. So if you don't want to read any of the news, just go down to the scans. Yesterday we had Shop. Yesterday we had Walmart. Yesterday, KNG, DRN, SARK, XLRE. I go over all of those at the end of the episode. The end of every podcast I do it. It's kind of like me, kind of saying, hey, what's important? Well, the end of the episode's important. So you got to listen to the entire episode if you want. If you don't want to listen to the episode, just go over to dailystockpick.substack.com. Sign up for the newsletter. It's completely free. Where do you find all this stuff? You can find it on my link tree. It's linked. The screen has the link tree, linktr.ee/dailystockpick. That or the newsletter, you can sign up for it. But David, that's what scans means. It's simply a way for me to communicate to you what's important and which stocks have a bullish trend. So yesterday, the S&P closed above 4,900 for the first time ever. It was spurred on by this. The U.S. Treasury cuts Q1 net borrowing estimate to $760 billion. This was not expected. This means that the Treasury Department is taking out fewer loans to pay our debts. You hear all about the deficit. You hear all about, it's going to cost us too much money. This is, hey, we're paying less. I don't exactly know what it means, but I do know that this was what spurred the market in the afternoon. If you take a look at the Qs, I'm going to remove this circle, this highlight. We're going to remove this. We'll remove all the annotations because I'll put new ones in today. You can see the afternoon, we bumped up. The period was 0.64 in the Qs. It's the same thing kind of in the S&P and then Dow. They moved pretty significantly, both of them. You moved in the morning. You opened up at 424. We closed at 428.16. So this isn't the S&P. This is QQQ. Remember, the S&P closed above 4,900 for the first time ever. So where are we going from here? Well, we kind of listen to Tom Lee because Tom Lee has been more right than wrong. And he's saying we expected new highs in late January. And he said this 2 weeks ago. He was on CNBC and he said by the end of January, we should see new highs. We saw new highs. And I think this is going to tell us how much further we go. I do think we continue to be strong, but then after that, there's a big air pocket. He expects a 10% pullback. I'm reacting to that, putting that news in my head, but not selling right now. Right now in pre-market, the Qs are down 0.23. There's nothing huge. We did have some earnings calls, blah, blah, blah. But I'm putting that in the back of my head saying Tom Lee says, hey, there might be a 10% drawdown. Maybe when we get to 2 or 3% drawdown, I make some moves in my portfolio. That's what I'm doing. That's from the large ETF. That's from the long-term stuff. The short-term stuff, I'm making determinations on the charts, on their earnings, things of that sort. But that's the long term. Remember, we listen to Tom Lee. Tom Lee has been more right than wrong. The other person we listen to is Dan Niles. Dan Niles has been very good. S&P has overbought levels into potentially disruptive events this week. The first one, Treasury auction. This came out yesterday at January 29th. He's talking about the bond auctions that happen. The Fed meeting this week is today, news conference tomorrow. 10 trillion in market cap of Mag 7 results. That's Microsoft, that's Google, that's Meta, that is Apple, and that is Amazon. Over the past year, only 10 of the 20 earnings reactions have been up for 5 of the Mag 7s reporting this week, despite huge rallies. Goal is to protect profits. I kind of agree with him. You got to protect your profits. And so that's why I'm looking at the charts. I'm looking at the fundamentals, and I'm taking all that news in, and then I'll make a determination going forward. But right now, it's just about being patient. I don't care. If you got in early enough, you've made your 1, 2, 10%, whatever you've done. It's just more about taking profits and making sure that you're not greedy and hoping that the market continues up, because the market does need a pullback. That's it. Dan Niles says that. Earnings this week. SOFI beat yesterday. And that was nice, 10% move. I will tell you, for SOFI, you came close to filling that gap. You came damn close to filling that gap. It is down 2% in pre-market. This gap is all the way up to 949. You got up to 945. So it was damn close to filling it. I would consider it filled. I would expect this to be like this back here in July of last year, where they reported earnings and they said they would be a net cash flow positive. I would expect it to pull back in this same vein. So if you look at this, you pulled back about 30%. I would expect a 20% pullback. If you haven't pulled out your gains, I would expect you to pull out your gains. Your RSI is at 70. You're oversold. It's my best guidance on SOFI. We also had a huge move in SMCI. I've said it back here. Hey, at some point in time, this is going to fill this $350 gap. You guys ask me all the time, how do you come up with your price targets? Well, look at this. And I said it when it pulled back here to 300. I said your resistance levels are between 300 and 350. And so that 300 level turned out to be absolute resistance. Look at that green line right there. That is absolute resistance for the months from August all the way to January. And then once we broke it, you saw old resistance becomes new support. It went up to 349, pulled back. And then right before earnings, we got this huge, crazy rally. Here's the thing. Look at this. You can see revenue and earnings per share. We're still growing. This just got cheaper. SMCI just got cheaper. If we go to SMCI, I think it's updated with the most recent ones. The PE is 45. So current earnings, it's about 45. The forward PE is 19. With a company growing this fast, to still have a PE of 19. The PEs on Google, on Microsoft, we'll go over those, but they're up in the high 20s. That's crazy. So to think that this one may get to the high 20s, not a stretch. Not a stretch whatsoever. In fact, look at this one. Downgrade Susquehanna. They downgraded it from 240 to 160. They don't believe in the hype. But what this does tell us is for some of the chip sector, and specifically, this is AMD that reports today. This could be really good news. Remember, SMCI builds rigs that are low energy for a lot of these data centers. They don't just build it for NVIDIA. They build it using AMD chips as well. Is AMD good? What am I doing with AMD? That was the big question on YouTube Live just right now. Here's what I'm doing. This is it's turned into a large position in my portfolio, which, worrisome a little bit because these chips are very cyclical. They have big swings up and down, unlike Apple, which is pretty consistent. This can move 10% in a day. It's down 0.89%. You're seeing the button hook potentially up here. You do have a gap down here between 147 and 149. They're going to have to give unbelievable guidance for this to remain at this level. I would expect it to come back down. What am I doing? Because it's in a brokerage account, I'm not selling before earnings. You can see SMCI reported before their earnings last week. They pre-reported, and then even they popped on 10% just on the guidance that they gave. So AMD is going to be similar. It's going to be the Q into the chipset. I don't think that Intel has anything to do with the outlook of AMD. I think right now chips are a two-horse race between AMD and NVIDIA in the AI race. I think those are by far the two best chips. But I'm sitting here doing this. What I'm going to do is, if there's a huge reaction on AMD, I'm going to look at two ETFs. And it really depends on what you're trading. But this is a trade. This isn't an investment. It's either SOXS, which had a cross-up at 503. It got you in with a MACD cross-up. RSI rising on oversold levels. It got you in at 503. We're at 491. Remember, when you take a trade in this, I want you to have confirmation. That's over the 9-day. The 9-day is the only one that's moving positive. But this one got turned around yesterday afternoon. And so right now you are up 1%. You're at 497. If you want to get in under that $5, might not be a bad idea. You could hedge your bet against AMD if you wanted to prior. I am waiting till earnings this afternoon. I am not going to buy this before earnings because this could turn quickly. Now, if you hear AMD is reporting an enormous beat, an enormous guide, and they're going up, your SOXL is your play. It's your these are both triple levered ETFs. That's my play on this. I'm not doing anything beforehand. I'm not looking at anything beforehand. So that's my play on that. One that reported yesterday, and again, Shea Boular, just on top of things, post this super micro. I mean, that chart alone will tell you it just got cheaper. So SMCI, if you wanted to get into it, it just got cheaper. I would probably wait to get into it, but I would try and find a support level that you're comfortable paying for it. It just did get cheaper though. Cleveland Cliffs reported. Their stock is down in pre-market. Oh, it's actually up it's down 1 point. It was up 2.55 yesterday. It's down 1.8%. It's at 1855. We'll look at the chart in a little bit. One of the things that I noticed in this release, and I don't know if I still own it. I may have gotten out of this with a slight loss, but I probably still own a little bit. But Cleveland Cliffs, it's part of the core portfolio. Part of the reason it's a core portfolio is just because we need some diversification, and I like trading this one. I don't necessarily like owning it, but the algorithm got you in at 1838. It had no confirmation. It ran all the way up to 1889. It's at 1870 in pre-market, which is down 1%. Part of what I noticed was they highlighted that 2023 was their best year ever. So what I want to do with that is I want to look at them pre-COVID. And pre-COVID, they were an $8 stock. Now, they came down from a $10 stock. They are a significantly better business than they were pre-COVID. But is it twice the business that it was pre-COVID? You can see they reported a loss of 5 cents per share. They had a 54 cents per share. Going into the last quarter, this business was just a little weak. So where do I see support levels for this one? I see support levels off of this kind of level right here. If you just look at that line, which is about $13, I would say you trade between that line and probably this line right here, which is about 22. That would be your long-term trading range. So you want to add when you get down below. You're about to have this death cross. When you get down below that, I think that's when you want to add. When you're up above it, you kind of want to trade it if you're in the long term. So let's talk about earnings today. There's a couple of really big ones. Microsoft. I bought in Microsoft, I think at about 403, 404, a very large position. I think about $100,000 I bought. I expect them to actually give extreme guidance. Doesn't mean that I'm buying more into this. I think I just got lucky that it didn't pull back. It may very well pull back. Where do I see the support levels? I see it right here. You can see the big volume shelf right there. You can see around 370. If we do pull back to that level, you're seeing a pretty healthy 7% pullback. Not huge, but all they'd have to do is say, yeah, we have some issues with the New York Times suing OpenAI. We have some issues there. They could say, hey, Copilot isn't going as well as we hoped it would. I don't believe in any of that stuff, so I bought it. Remember, at these all-time highs, one of the things you want to think about is Bob. And I'll include that Bob article, which is basically a guy who bought at the highs and then retired every time for 20 or 30 years. He bought at the absolute highs every year. Still became a millionaire just with consistent dollar cost averaging. So in names like this that are continuing higher, you just want to basically add to them when you have the money. And I had the money and I thought, again, this is a good, solid stock. I had a green line in here, but I guess I deleted it on its trail to 600. You're well over that. But if we're going to get to $600 per share in 2025, which are the estimates, this one's going to move higher. So just a matter of finding your entry point in. Google reports today. This is part of the core portfolio too. I have a significant position in this one. I said anything under 150, I think you start adding to it because I don't think that we're getting down to the 130 like I said in this note. The thing you're going to have to worry about this one is their cost. Are they going to lead AI? I think they do. I use Bard. I love Bard. I use a ton of Google's AI tools. I use Gmail. So remember, I tend to say, hey, buy stocks in products that you use. This is a company that's just making money. They're spending a ton of money, and they're going to continue to spend money. Are they going to be disrupted by some of the search options that OpenAI, ARC, and Perplexity, I think it is. A couple of them came out with iPhone apps or websites where you can do Google search. And it's actually not a Google search, but it's an AI search trained on large language models. And it actually presents things a little bit better than Google does without the ads. Well, how is AI going to make money without ads? That's the big question. How are they going to do this without ads? It's about giving you the best results you can. Starbucks. This is one that I've said, hey, buy under 100. Here's the problem that you have with Starbucks. As you head into earnings, you do have confirmation. The algorithm had you buy in here at 92.47. I don't know that it's worth the risk. If you're into Starbucks, if you buy Starbucks every day, I would say under 100, great price point. Do I think they're going to blow it out of the water? I still think that Chinese consumer is just weak. I think the American consumer is decent. But I think that a Chinese consumer is weak, and I think you still see floundering in this name, and I think you trade in this range. I think this range is between 89, about 90, and I think the high point is about 105. It's not a bad name to have in your portfolio, but I just don't see it breaking out to new time highs and growing the way that it needs to. UPS. They slid after their revenue disappoints. FedEx is down as well. The shippers are just down. It was the guidance and it was the earnings. Shippers just don't have a lot to cheer about right now. In pre-market, you're down 5%. This was down as much as I think 7 or 8%. JetBlue is down after beating estimates but giving bad forward guidance. Pfizer was up 1%. GM was the big winner. Ironically, I'm not a big fan of this company, but they blew away earnings. And they're up 8% with big guidance. You know where their weakness was? China. China was the weakness. That's because they're going EV. And GM doesn't have an EV option. So, where are they going to find growth in? I don't know. Probably not in this country unless you're selling ICE vehicles. Wednesday, we have MasterCard and we have Qualcomm. MasterCard is an interesting one in the payment space. It just continues higher. I mean, this one just continues higher. If you look at long term on this one, the algorithm makes you 54% versus 17% buying and holding. Over a 2-year period, you get in 21 times. Now, if we run the algorithm, we can look at that long term. I mean, you're just trending higher, like the 50-day and the 200-day. It is a bit stretched. You talk to any business owner, and they're paying that 3% fee. I just got an email from my my dog sitting place that they're going to charge a 3% upcharge. They'll give you a 3% discount if you pay for cash because they just want to avoid the fees. But yeah, MasterCard got you in at 426. You're at 440. Qualcomm, which is in the core portfolio, this one has earnings tomorrow as well. Kind of going to determine, I think, how AMD says, hey, you want to get in here. If AMD kind of disappoints, I would expect this one to pull back. You're seeing the button hook right here. You're under the 9-day. There's a gap here between 145 and pre-market. You're at 148.29. You can see it got you in right here at 140. The algorithm loses you 12%. Buying and holding loses you 9%. This one has a good dividend. So I would just look for an entry point if you want Qualcomm. It is not at all-time highs. I think the all-time highs are around 170 here. 180, 190. That's where the all-time highs are. This just crossed the 200-day. You're seeing the 50-day move positive. If you get that golden cross, I think you'd start to touch these 170, 180 levels. But again, it's gonna determine on the guidance. Merck is one. Royal Caribbean, Apple. We can talk about Apple on Thursday. The Merck and Royal Caribbean report on Thursday. Apple is one of the big ones that reports. You're seeing weakness in this one. You're seeing that the MACD crossing down. You're seeing the button hook has happened. It hits that 196, 197, almost 200 level, and it just starts to pull back. That's it. You're seeing a good volume shelf up there, but it's just starting to pull back. If we go back here to a weekly on Apple, because I don't think that you trade this. The algorithm makes you 37% versus 13% buying and holding. But if you pull it back to about here, you can see the volume levels. The VWAP up there at looks like about 183. It's got room to pull back. Do you buy into it? You just buy and hold. Just find an entry point. Amazon, I think anything under 160 before tomorrow. Before Thursday could get you in. And I posted this as my best option to play for this week. We also had that worked out last week with Intel. But yeah, this is the one that has not hit its all-time highs. You're still 18% below your all-time highs. Now, there's a volume shelf at 170 on this one, but you don't have a lot of volume up here. If we pull this back, let's see, we're going to pull this back right here. And you'll see that volume shelf right there at 170? That's where people are holding. That's where it's going to probably pull. With good guidance, it's going to go from the 160 to the 170. I think this one is my absolute best play. Microsoft, we went over a little bit. We're going to go over Meta. Microsoft, we already went over. But Meta, it just crossed 400. This is one of the biggest winners this year. And where was it going? I was telling you the all-time highs were at 384. With the ad spending dollars, we were going to go up. That was at this 331. I've been adding to this one the whole time. You are oversold. Do I think you could buy into this one? I think we pull back to that 384 if for some reason it doesn't beat, if they give some type of crazy guidance. But I don't think it's super expensive. We can go over here and look at Meta. And its forward PE has now been 22. Remember that when this was 15, the forward PE? Yeah, that's when you should have been buying it. The PE right now is 35. This is super expensive. They're going to have to blow it out of the water. Again, I'm setting this up where Tom Lee says, hey, we're due for a 5 to 10% pullback, or Dan Niles says, time to take profits because these haven't performed really well with earnings and stuff like that. Look at the last earnings on Meta. So if you're trading these, trade them. But if you're trying to find entry points, I don't know that it makes sense buying before the earnings unless you're 100% sure that you're going to be comfortable holding at that price, because you can dollar cost average your way in. So if they do go down, you basically buy, you can sell them if you want to, take the loss, or you just buy more. But that's the way you play these. Another one that's reporting on Thursday that I find interesting is Atlassian. TEAM is the symbol. I've gone over this before. I thought this was a great buy back here, where I was saying, hey, 202, the algorithm loses you 9%, you lose 19% in buying and holding. So the algorithm protects you. They have earnings coming up on February 1st. That's Thursday. So this one, 244 was the algorithm buy. You're at 254. If you look at a long-term play on this one, you can see we're just crossing the 200-day on this. It's not crazy to think that this one, now, this one is even more expensive. This is a software application. Forward PE is 85. They're going to have to blow it out of the water. The average target price is 246. So you're basically trading into perfection. So make sure that you're comfortable with what you want to buy. Interesting ones that on Friday that may not be that expensive. Exxon. Now, Exxon, it's probably a $110 stock. It's kind of where I sold it at, 110. We're seeing it just break above the 50. The 9 days moving positive. This is on the 4 hour. It's oversold. It's at 64. So it's not crazy to think that you could buy this because the PE is not nuts. You look at Chevron and Exxon report earnings before the bell on Friday. Oh, let's go Exxon. We'll go Exxon over here. The PE is 10. Forward PE is 11. They have a 3.58% dividend. They will probably up the dividend. Oil has been in the $70 range. It's not going up. So, but they continue to make money. Where they're basically pulling more money out of every barrel. Chevron, same thing. This has a 4% yield. So there's places to make money, and we can look at AbbVie before we look at the chart on AbbVie. Here's the PE, forward PE of 14. It's not crazy if these guys bring about a GLP-1 drug, because we'll look at Lilly, which has a cross up today, by the way. But AbbVie, chart looks good. Kind of turning over, little button hook. You're in at 138 on this one, just back here in November. It's taken off. You had a golden cross. If you bought just at the golden cross here at 154, you're up 6%. You got confirmation, kind of turning over a little bit, but you can see the algorithm didn't get you out the last 2 times that it turned over. Algorithm performs okay on this. It loses 3%, which I don't think with drug manufacturers is a horrible thing. If we look at a long term on this one, you can see it's just chopped. You're at the upper end of the range, but when does it break out? When does it break out higher? I mean, that's the range right there at 170. I mean, that's not crazy to think that, hey, maybe this earnings period breaks out if you're comfortable holding it. Again, this is a company that has a drug that may come into play. So earnings, it's a little bit risky, but you can do it. Biggest movers of the day, GM, like we talked about, Supermicro. Woodward climbed 6%, better than expected. Sanmina. UPS, we talked about. Whirlpool. This was an interesting one because they projected year stats of yearly full sales at $16 billion, falling short of the $17 billion. This was interesting because they're continuing to say that people are trading down on appliances or not buying them at all. This is, that's maybe a mark on the consumer. So you may want to be careful. That's a big story, I think. We just talked about Exxon. This is an article you can read. What will the election do to stocks like Exxon? You can see BP, Shell, YPF are in there. So there's other stuff in there. I thought this was an interesting article, just a headline per se. But the U.S. is already pumping as much oil as we can. So more oil than we ever have in history. So does the election make a difference? I don't know. Maybe. Yasmin wants me to look at TDG, which is TransDiam Group, which looks like a solid stock of late. $1,113 per share. Algorithm makes you 90%. Buying and holding makes you 81%. TDG, let's see what they do. She asked for 2. TDG, they are an aerospace defense. So PE's high at 49. Forward PE not crazy at 28. Average target price $11.23. You're at $1,081. It's kind of the same thing. All these stocks that are trading very well are at highs. Look, everybody's selling. Nobody's buying. I'm not seeing, small buys either or small sells. I'm seeing these guys selling at $969, $1,000. Maybe they know more than we do. They're insiders. So maybe it's just overpriced. That would be my thing. CVX we just went over. I think that one solid move if you want to invest in oil. I don't think this one's going to kill you. So CVX, it's not horrible. Their earnings are coming up Friday. Dex wants me to look at IBM. IBM just mentions AI. I think I've went over this one, Dex. It's going to come back and cover this gap down to 174 probably. It's going to touch at least 184. So if you want to buy this, I'd just wait for it to come back to 184. The MACD is super high up there. It's oversold. I think you just wait. X Racing Inc. What do you think of Duo's technology? They do rail AI and would like to know your input and feedback. I know nothing about Duo's technology. DUOT. Let's take a look. It looks like hype, I would say. Duo's technology, we'll take a look at a long term. It's overbought right now. I think, maybe look at that volume. That's hype. Right there is, as it's going down, it has no volume. And then all of a sudden it just pops up. There's some hype. There's obviously some hype here for some reason. You got gaps all the way up here at 60. I would guess that this is, it doesn't look like a good stock to me, DUOT, but it looks like it may be just, it doesn't have a PE. They're losing money. They're losing $10 million. They may become profitable. That may be why people are piling into it. I'd probably just stay. There's better places for your money. You could put your moonshot in here, FX Racing, but, this kind of stuff doesn't interest me, especially a software application. I don't know too much about it, but if they do have hope, I'd rather get in at the $6 than buy it at $4. Buy it at $6 on its way up when it's pulling back from 8, or you can even wait till it pulls back to 2 and buy it. It does look like on this daily chart like $3 is kind of your support level. Karen asked me about DEC. Let's take a look at DEC real quick. I think this is the fake wood kind of stuff. Or no, this is Deckers. This is the shoe company. This is Warren Buffett's absolutely worst trade ever, he said. I'd stay away from it. Footwear and accessories. It's got a PE of 33, forward PE of 28. This just seems expensive for a shoe company. Factors likely to influence. It looks like their earnings are coming up. Telsey Group reiterated on January 25th, outperformed. They put it to 850. The chart, I think this is very, why am I paying all that money for a shoe company? Deckers Outdoor Corporation. Why am I paying all that money for a shoe corporation? I don't know. Buying and holding 2 years ago, you made it 158%. So it makes sense. But shoe company, you have this gap here that this one's not coming into play, but your earnings are coming up. Maybe it's, maybe they're doing really well. Maybe they get to 850. So I don't know. George, I say that as the ugly white American who eats at Hooters at every foreign city. Yeah, it's Jorge. Palantir, what are your thoughts on Palantir? Palantir I like. I mean, Palantir is kind of fluttering around 17 here. You can see it's putting in kind of its capitulation here at about, between 16.50 and 17. Their earnings are coming up on February 5th next week. It's floundering around this oscillator. The RSI is in no man's land. It's not crazy. It's a little bit expensive. Their forward PE is 57, so they need to continue that crazy growth because their PE right now, based on current earnings, is 264. Based on the forward guidance, it's 57. So they have to continue that crazy amount of earnings. If you see that crazy amount of earnings, I think you pop to 20. I'm in this at 18. I have like 3 shares. So Jorge, or as the ugly American, George, I like the stock. To quote Roaring Kitty, I like the stock. Info Byte or Bullish Bytes on Instagram. If you want to skip Airbnb for now, he said Infosys is better. They do IT consulting. Seeking Alpha gives it a buy on the quant. Analyst ratings and Wall Street, their main customers of Bank of America, JP Morgan, etc. Most firms allocated at least 50% of IT costs to IT consulting. So Infosys, this is an interesting one because I think you're banking on, I think it was Baker Hughes just reported their earnings, and they saw a huge increase in consulting. And that's one that pushed this one up even higher. You're looking at a $20 stock here. Algorithm loses you 23%. Buying and holding loses you 10%. In Seeking Alpha, if we go over to look at Infosys, INFY is the symbol. They're right. I mean, everything says it's a buy. They don't give you price targets here. It's a little bit high. 52-week range goes all the way up to $20.06. You're at $20.02. Or I'm sorry, $20.37 is your 52-week range. So you're a little high. I mean, it's ranked 3 out of 27. I would say, we go higher. Maybe you want to look at one of these other ones. Valuation, D+. That's where they ding it. But it has a 2.13% dividend yield. So as long as consulting goes by, yeah, you're good. Peter from email. I'd be interested to let you know 2 picks below. Stryker. In TrendSpider, January and February all have a 100% positive. Bollinger Bands seem to be cinching up. Let's look at, since he's mentioning Stryker. I think this is a defense contract. Cinching up and trading on the lower end of the bands in the 4-hour chart, so it has room to move when earnings coming up. Could be potential swing trade. I see these exactly what Peter's saying. It's cinching up right there. See? So it's going to make a move higher or lower. Their earnings are coming up, it looks like today. Yeah, today after the bell. Your guess is as good as mine. For these defense contractors, I typically look at the long term. And you're at all-time highs. Doesn't mean don't buy it. But if you just look at a trend line of this prior to COVID and you kind of touch 3, you're looking at significantly higher. Even if you touched the current recent price point, you're looking at a higher price, $347. If we look in FinViz at Stryker, you're seeing PE's 46. Listen, the medical devices. It's medical devices, not stuff. Stryker, I don't even know what they do. Let's see. Technology company engaged in the provision of innovative products. If you know something about the products and stuff, maybe it's higher. I'm not a big medical devices guy. I don't know anything about it. But it does look like, hey, the trend line, it's there. Volume, obviously not there because you're reaching into all-time highs. So the only way the volume goes higher is to create new volume shelves. From a long-term perspective, yeah, you got the volume up there between, it looks like 288 and 300. 313, I don't know. Pfizer, more of a long-term play. Fundamentals are strong. Revenues increasing. Cost lowering consistently year over year. Gross profit up 20% over the last year. Earnings per share 50% year over year for the last 3 years. Let's look at Pfizer. FI. FI is Pfizer. Yeah. I mean, it looks, that move right there from 114 to 143 since the October lows, that's a good one. I mean, it looks like the volume's solid. Weekly, look at this. You're looking at all-time highs. Same thing. I mean, it's the same exact thing. You're looking at all-time highs. So how comfortable are you buying into all-time highs? If you believe in the consistency, then you invest in it. I mean, that's essentially what we're looking at, is if you believe in this company. Remember, I've invested in Apple at all-time highs. No problem. I've invested at Microsoft at all-time highs. Am I investing in Pfizer at all-time highs? I mean, it's a, payments company, information technology? This is the research that you have to do. These are the stocks that you have to look at. If you're comfortable with it, buy it. Ted, can you please comment on the price action of STZ over the last few weeks since the most recent peak? Think this is consolidation, normal pullback, or is there something more going on? In scanning, I found this as a recent golden cross-up on the 4-hour algorithm. You can see. So here's what happened. You're seeing the 50-day move up. I think it's just pulling back to the 50-day. Simple as that. Your MACD, this weekend, I talked about divergence and how divergence can be, a tool to kind of look at. If you're seeing something that doesn't make sense, here, if we look at this and we go here and we just look, that RSI is going up. And if you look here and we just go, that stock price is going down. That's divergence. So I don't think it's normal. Do I think that there's anything to this? I don't know. I don't know anything about this business. It's at, again, all-time highs. Simple pullback from all-time highs. This Constellation Brands, I know, has a ton in the weed business. So Ted, I'd say it's that divergence that you see on that 4-hour. That does not bode well to me to say, oh my God, yes, we're going up. And by the way, that divergence is told by the 200-day that's moving down. Even though your 50 days moving up, could you go higher? Well, they have to justify the move up to this 272 level with earnings. And it looks like they didn't do it because they did get a pump. But the Wall Street's not projecting, hey, we're going to see this continue. So it's as simple as the market. Shep from Spotify, SMCI after this monster, I went over it. Scott and Dex, I'll get to your picks later. Let's go over some of these cross-ups. Palantir, ironically, Palantir cross up on the 4-hour. It gets you in here at $17.10. Eli Lilly, we talked about AbbVie being a potential a buy on the Amgen. Amgen is the one with GLP. The Eli Lilly continues to move. This is why I want you to own this under 600. I don't know if it will get back there, but the GLP-1 drugs, this is a stock that will trade like a tech stock. So it's got confirmation their earnings are coming up. If you don't think these guys are going to say, hey, we've got GLP and it's going to go crazy, yeah, it's going to be nuts. So, get in before earnings. It's 641. It's just another cross up. The MACD came down. Everything on this one points positive on Lilly. Walmart, we're going to fix it, fill that gap. We're just going to 168, I think it is. 168, 169. We're just going there to fill up the gap. That's it. UVixi is one that crossed up. And this is a triple levered ETF on the VIX. This is not an investment. This is one that you trade, 754, but you can see we've lost it every time. The VIX is currently up 1% at 13. If we go over here and we just go to FinViz and we type in the VIX, you can take a look at the live VIX. Let's see. The VIX is up 0.22. It was up 1% in early market, so it looks like volatility has slowed down a little bit. Royal Caribbean, Carnival Cruise Lines, they both got cross up. Zoom, GE Healthcare, which I actually like, got a cross up. Zscaler, this is an interesting one because this is part of the cybersecurity. This is another one. All-time highs. I think it's all-time highs. Let's go look real quick. Algorithm makes you 15%. Buying and holding makes you 3%. It's not all-time highs, but you're probably going there. You're probably going to 350. I mean, again, it's expensive, but their earnings are coming in. Right now, would I buy it right before their earnings on, let's see, February 26th? Maybe. I mean, I own Palo Alto. I want to get back into CrowdStrike. I own Fortinet. Fortinet, have we crossed that gap? Let's see. Fortinet had a cross up earlier, and this one moved pretty significantly. And I've said, hey, we're going to fill that gap up here to 75. We're at 66 right now. We're going to fill that gap. Solid gap fill from the last earnings. Took 42 days, but 25% back. Yeah. So, pick and choose. Remember, use the scans the way that they're supposed to be, man. If you don't have TrendSpider, you try and figure out a system where you can do 4-hour charting in either Webull or one of the programs. You can use Thinkorswim for free if you want. Fidelity Active Trader Pro. I don't think Active Trader Pro lets you do 4 hours. But any of the links that I have here, TrendSpider, we talked about it a little bit. TrendSpider is where my 4-hour algorithm. If you want TrendSpider, just click on this link. You can sign up. And once you sign up, you're going to email me. The email's right over here, dailystockpick3@gmail.com. And just email me, and I'll email you back with the welcome letter. Seeking Alpha. This is a tool that I don't think people realize how good it is. If you want the premium version, click on this link and you'll get $50 off. It's $189. This tool is fantastic. Understand Seeking Alpha. Click on that link and basically get a free version of Seeking Alpha. Doesn't have all the bells and whistles of the premium, but I will tell you, it is worth signing up for. It is worth getting some type of account over here so that you can start looking at this stuff. And if you want the premium, you can get $50 off. It has a free 7-day trial. You can get that. What doesn't have a free 7-day trial is Alpha Picks. And Alpha Picks basically beats the S&P by a fairly large amount. And you can get it. Basically, they email you these analysis when they add or they subtract from their portfolio. So it's one of those services. I usually do not recommend these, but the reason I do recommend this one for $100 a year, which is fantastic, it beats Motley Fool, it beats everybody. But they give you these great detailed explanations of why they do it. And that will help you go forward and understand why you pick stocks. And maybe you won't ask me about Mullen. Maybe you won't ask me about Cano. Maybe you won't ask me about a biotech stock that has no proven track record and you just read it somewhere on the internet. I got a great question from somebody in the private Facebook group last night about, is Yahoo a trusted source? Well, remember, Yahoo is just an aggregator. They take different places like Zacks, and they take Motley Fool, and they take Seeking Alpha, and they basically combine it into, and they will put some headlines that are crazy out there. And this particular headline was, here's 2 stocks that you can buy and hold for a lifetime to make $1 million. Something of that sort. You gotta play suspect on that. One of them was Plug Power. Plug Power is not a company that you can buy and hold. Plug Power is one, we went over it before. You can take a chance on it if you want, but it's not one to buy and hold forever. They're losing $949 million. They're going to dilute you because they don't have enough money. It's not one to buy and hold. So understand there are headlines out there with people who are talking their book who want to basically get the clickbait. And so when you go over to Seeking Alpha, there's no clickbait. And that's the big thing is when you go here to the home, you can look at the trending news. You can look at the trending analysis. These are all basically curated for you as part of your premium subscription. That's why I like Seeking Alpha. But if you just want the Seeking Alpha picks, that portion of Seeking Alpha is an additional $100. It's not a bad thing because, again, if you get just a couple of these and you get the entrance into a couple of these, that's my core portfolio. But if you look at the alpha picks, if you get into a couple of these, then you can actually, make the $100 back. It's not that hard. But again, I think they beat it during a bull market. How do they perform in a bear market? I don't know. I mean, this is since July of 2022. So I think that's the view performance. I think that goes back to January 22. Let's see. How we get new subscribers, how we achieved outperformance. It goes back to, July 2022. So, but you can see they do beat S&P, as do I. So you can keep listening. I will talk to you guys tomorrow. Take care. Bye-bye. Good luck to everyone holding AMD. Good luck to everyone holding Google. Good luck to everyone holding Microsoft. I will probably be trading. So set the alerts on YouTube if you haven't. I may go live. We'll see. Talk to you later. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock day trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.